Yo, QCLEE here, back and better with some more free game for you guys today. I hope you're all having a blessed day today, baby. And if you're not, you better stay and watch till the end of the video because the knowledge I'm about to drop for you guys will revolutionize your trading forever. So a lot better days are ahead for you for sure. Now, for y'all who do not know, I'm QCLEE once again. I'm a full-time investor, trader, and entrepreneur. I swing trade, I day trade, I scalp, I do everything, baby. So without further ado, let's get into the free game in the video about risk management. This is going to be super important. I promise if you guys stay and watch this whole video, it's really going to change your trading for the better forever. Now, without further ado, let's get straight into it, baby. Risk management 101. Let's go. Now, what is risk management? Risk management is the combination of strategies, rules, and practices to control and minimize the potential risks that are associated with investing. It's very self-explanatory. Risk management is exactly what it sounds like. Risk management. Now, risk management is, like I said, the most important factor for consistently successful trading. Yes, you heard me right, the most important factor. So you're watching the most important trading video right now. Now, it's not the strategies. It's not how much money you make. It's not how much money you have. It's not how many screens you have. It's not how good you are at technical analysis. It's about risk management. Remember, you got to pay to play. But if you can't pay anymore, you can't play anymore. So it's all about managing that risk and preserving that capital to help it grow. Now, let's move on. Now, let's go over some quick rules of risk management. There's going to be more of these in the future, so stay with me. Only risk 5 to 10% maximum of your account per day. This is meaning you can only put this up to risk, 5 to 10% maximum. Honestly, 5%. 5%. We'll get into small accounts soon, but 5 to 10%, you can only risk that, and I'll get into this later. Now, when you begin to get emotional, step away. No impulse trading. You know how many traders I see get emotional and make impulse decisions and blow accounts? Don't let that be you. When you're getting emotional, step away from the market. And I think the hardest thing for new traders is realizing actually when they're getting emotional. So, work on being self-aware and work on knowing when you get to that emotional point where you think you're going to make an impulse decision and then step away, give yourself a break. I used to do it all the time. There's no shame in it. Just step away, give yourself 30 minutes, an hour, even a whole day, a week if you need it. Just step away. It's better than losing money. Now, only trade your plan and stick to the plan. You plan the trade, you trade the plan and nothing else, okay? Now rewind and hear that one more time and say it over again. It's going to be a little tricky, but say it over. Keep that and remind yourself that at all times. Let's move on. Now, some rules continue. No full porting ever. This is when you put your entire account into one trade. Putting all your eggs in one basket, guys, this is never a good option in any type of investment in life. You never put all your eggs in one basket, okay? You never want to do that. No matter what, no excuses, no matter if you think you're going to win, no matter if you get insider information, don't do it, okay? Now, this is also a very important concept that I'm about to break down right here. 1 to 2 risk reward ratio minimum. Meaning you need to risk 1 to make 2, not the other way around. You need to risk 1 to make 2 at all times, potentially. Okay? So this means you need to risk 100 to potentially make 200. Okay? And I'll show you how this works. I have a live trade actually that I signaled and took to show you guys a bit later. Now, only trade your high probability setups. In the last video, I gave you guys a totally free high probability pin bar candlestick setup. And so if you haven't watched that, go back and learn that. And I'll give you guys another example in this video too in about 5 to 10 minutes. So stay tuned. Now, what does this look like in real time? In fact, I'll show you guys right now. Let's get into this. Now, let's go. Now, here we have the stock net, Cloudflare Incorporated, all right? Now, what's the first thing you guys see here? I know what I see. And, it's not like we're pointing to it or anything right here. But what do you guys see? We're on the daily chart, by the way. And if you don't know charting, remember, navigate to my last video. I explained everything on how to chart from A to Z, baby. Now, we see net, a huge gap. A gap. Now, what is the significance of a gap? Is it just a gap? Do we just look at it and keep going? No. A gap is where price moved extremely drastically, okay, as we can see here. And it creates a price gap. Now, price gaps are extremely key in trading because they are one of the highest, I repeat, one of the highest, if not the highest, probability setups to take. Gaps nearly always get filled 90 to 95% of the time on the market. They usually always get filled, okay? And by get filled, I mean the price action is going to retrace and fill that gap. You see, look, gap from here all the way down to here, but now we see in those next days, it filled it. I mean, it went even farther too, but it filled that gap, okay? Now let's find another example real quick before I get into this trade. Gap right here, boom, filled it down right there. Gap right here, boom, filled it up or all the way to right there, even more. So gaps get filled. They get filled. That's why they're high probability. Now, let me explain and break down this trade and why the risk-reward ratio is amazing, okay? So here we have a gap all the way from 59 to 47, so a 12-point gap right here. Now, I'm going to zoom in really quick to get this better. Now, so 12-point gap all the way here. This is called an alert right here. Net crossing 47. So when it crossed here, it gave me an alert so I could know to enter. Now, so a 12-point gap all the way from here to here. Now, I knew this gap was going to fill one way or another, so I'm getting ready to play calls. But I'm not playing calls until it gets into that gap fill territory. So if it needs to get and hold above 47 for me to be able to have confirmation for this play. If you don't know what confirmation is, go ahead and navigate back to my last video. I explained it. I drop a lot of free games, so don't sleep, y'all. Now, so this is my entry just about right here. Now, here's the daily chart, okay? We'll go down the time frames and get more precise in a second, but here is where I entered, okay? But first, before I go down, let me explain the risk-reward ratio factor of this trade, okay? So look, I have a 12-point move, okay? And now my stop loss is this yellow line right under here at 46.5. So let's break it down. 46.5 and 47. This is half a point of movement. I'm risking half a point to make what? 12 points. So my risk-reward ratio here is 1 to 24. 1 to 24 risk-reward ratio. That is amazing, extremely ideal. Now, let me explain the importance of this, okay? So here's why you want to only take good RR trades. Now, say I have 5 trades that are risk-reward ratio of 1 to 24. Say I have 5 gap fill plays, which is very possible. I've played like 6 gaps the past 2 weeks. In fact, we've had a lot of fun with those in premium, by the way. So say I take 6 trades that are all gap fills that are all 1 to 24 risk-reward ratio in the past 2 weeks, okay? Say I lose on one of them because losses are inevitable in trading, okay? It's all about outweighing those losses with wins. So I lose one. If I lose one, okay? Actually, if I lose 5, let's say I lose 5 out of the 6 trades, okay? But by loss, I mean my stop loss is right here. I'm only risking half a point, okay? So if I lost 5 out of those 6 trades with this RR ratio, and then I hit one trade, I make everything and more back. So that's the real reason. That's the real good part of this, is that you only need one of these to recover your whole account and more. And more, baby. And I'm only taking trades for the good RR. So best believe that my account is looking good because I only take good RR trades and I use my risk management well. So I hope you guys are able to grasp that concept. Now let's go down in the time frames, and we're actually going to show you guys how I play this. And I signaled this in premium to all my members. I'll put it up right here or something so you guys can see the full proof, the full transparency. But let's just give you a little visual right here. So I entered just about right here, you know, a little bit above 47, like 47.5-ish. We wrote it up. I signaled it. I signaled the first call. We made about 100%. In fact, it went over 100%, about 180% right here. But here's, you see this red candle here? It got a little bit choppy here, so I went ahead and I sold my first call right here for about 100% profit. But look how much room we have still left. So this is my play. This is my analysis. So I already made 100% and got out here, but I re-entered again and signaled it to my entire premium Discord, which I'll attach right here once again. And then we made over 300% profit riding up from here, from about here to right here. Huge green candles. Let's go down the time frame. Let's Just look at this beautiful price action here. Stop loss right there. Boom. Only risking half a point to make 12 points. Wrote it up to here. Sold about right here. Entered again right here. Made over 300% profit, meaning you tripled your investment on that second trade. And on the first trade means you doubled your investment. So in total, this gap fill play gave us about 450% in profits. 4.5 times your initial investment. So $1,000 in, 4,500 out. Okay. So that's amazing. And again, if I'm only losing a little bit right here, that's what, maybe $250 if you put 1,000 in. That's a very small bit to make $4,500. Risking 250 to make roughly 4,500, 5,000. Amazing RR ratio. Okay, so you guys got to keep that that concept grinded down into your head because it's really gonna make the biggest difference for you guys. Now, without further ado, let's get back into the risk management for small accounts, baby. So let's go. Now, risk management for small accounts. Now, I know a lot of you guys have small accounts. I have a lot of clients with small accounts, so we cater to everybody. So don't worry, I got some for y'all too. I'm not going to leave you out. Now, you can leverage more position size for the small account, realistically, to build it and make good profits, but you must have a stop loss in place. So you're still only risking that 5 to 10% per trade. I'll give you an example in a sec. Now, by stop loss, I mean, you can have a stop loss in. It's always good to have a stop loss in when you're trading. But sometimes I've seen that they stop you out early sometimes. So sometimes I'll use a mental stop loss and set like a price alert to where when it gets to that price level, I can choose manually if I want to sell or not. It doesn't automatically kick me out the trade. Now, here's an example. You have a $2,500 account. So for this, you can put about $750 into a high probability trade, but you must have a stop loss, ensuring that you don't lose any more than $250. And in reality, you really want to have that stop loss to only go for 5%, so $125, basically. So let's continue. Now, risk management is not just the list of boring ass rules that we blindly follow. It's a mindset. It is a total and full mindset. It's basically a lifestyle, honestly. I mean, I'm making it sound complicated, but it really isn't. Once you've got this stuff down, it's literally second nature. So, and remember, this is a really important quote. And in fact, when I heard this quote and started applying it, this is when things started to really like add up for me. The best loser always wins in trading. Now, let me explain. The best loser always wins because losses, again, are inevitable, but profits are not always inevitable. So now, if you keep your losses small or keep your losses, non-existent in some ways, basically, you can absolutely be extremely successful. So you want to keep those losses small, cutting them quick, and let your profits run into your price targets, okay? Now, risk management is what's going to keep you guys in the game, baby. Remember, you do not want to blow an account. So risk management is what keeps you playing the game, keeps you paying to play, baby, and keeps you building that account, making profit, making money, baby. Now, always think of your next 100 trades when you're trading. This helps to put things in perspective. So you're not just thinking, oh, this might be my last trade for the week. Oh, I got to make this money now. Patience. Patience pays, baby. Patience pays, okay? Small wins add up. Trust me, small wins add up. A few $100 a day, that equates to tens of thousands of dollars every year. So don't sleep on those small wins, guys. They really add up. Now, lastly, your expectation. This is also very important. And if you made it this far, thank you so much. Now, do not expect home runs every single day, okay? Home runs will come. They'll come. I've had plenty of home runs, and they will come. But small gains are going to add up fast, too, like I just said, okay? So don't fixate on those huge home run, YOLOs, crazy earnings calls, and this and that. They'll come. Trust me, they'll come with that consistent trading, okay? Just don't fixate on them. Now, this is a very important quote. This also helped me revolutionize my trading. Now, it's always better to be reactive than predictive in the market. Just follow what the price action shows you. Just throw away all of your bullish or bearish sentiment about the market next week or the market tomorrow. I see so many traders going into the market just expecting, a bearish movement or expecting a bullish movement and then betting that way when in reality, like they're totally wrong. So just try and get all of your personal bias, take it, crush it up, throw it out the window, baby, because that is going to just only hold you back from really your full potential in trading, okay? So just react to what the price shows you. Price action is king, baby. It is king. Price action over everything. So when trading, just follow the charts. Follow what the price action shows you and nothing else, baby. Now, that is it for this lesson. I hope you guys learned something. If you did, go ahead and subscribe. Give me a like. Give me a comment of what you guys want me to teach next, baby. And by the way, again, this is QCLEE. I'm going to drop all my socials in the description below, baby. And we've got a lot more free game coming every single week, y'all. So you do not want to miss these new videos. In my next few videos, I'm going to explain how I turned $3,000 into $19,000 in 5 days. So stay tuned, y'all, and you guys have a blessed day, baby. This was QCLEE with MTC. I love y'all.